The cryptocurrency market is once again facing strong sell-offs, with Bitcoin dropping below $95,000, XRP falling to $2.44, and an overall correction of 3.5% across the board. While at first glance this may seem like another typical dip, there are far deeper forces at play. And today we're going to uncover what's really happening behind the scenes. One of the most alarming developments is that JPMorgan CEO Jamie Dimon is actively selling shares of his own bank, JPMorgan Chase. This move raises serious concerns because when a CEO starts dumping shares of their own company, it often signals upcoming economic turbulence. If Jamie Dimon is offloading his JPMorgan stock, what does he know that the rest of the market doesn't? Could this be a warning of an incoming market crash or a major correction? At the same time, Michael Saylor, CEO of MicroStrategy, recently held a closed-door meeting with the SEC on February 21st. The purpose of the meeting was to discuss a framework for digital assets, reinforcing the idea that the push for cryptocurrency regulation is intensifying. This is significant, as companies like Ripple, Coinbase, and Kraken have been advocating for clear regulations for years. Now, we see major institutions actively working with regulators to establish a legal framework for crypto. For XRP holders, this is extremely relevant. If a regulatory framework is established, XRP could become one of the primary assets integrated into the global financial system. Unlike other cryptocurrencies that lack clear institutional backing, XRP has already been adopted by financial giants and continues expanding into banking infrastructures. Meanwhile, market manipulation is in full swing. Over the past several weeks, massive amounts of Ethereum and Solana have been liquidated, sparking suspicion that major financial players are orchestrating a controlled sell-off. The goal? To shake out retail investors and accumulate assets at a lower price. We've seen this time and time again, and yet every market cycle, new investors fall for the same trick. Adding another layer of uncertainty, inflation in the United States continues to climb, averaging 0.4% per month in the last 3 months. If this trend continues, annual inflation could reach 4.6% by July, marking the highest level since April 2023. As inflation rises, the Federal Reserve may be forced to take aggressive measures, potentially impacting the entire financial ecosystem, including cryptocurrencies that at the institutional level. There are even bigger moves happening. Germany's DekaBank, a massive asset manager with over $377 billion in assets, has announced it will start offering cryptocurrency custody services. What makes this particularly significant is that DekaBank is working with Metaco, a company acquired by Ripple. This means that Ripple's infrastructure is now directly tied to a financial entity managing hundreds of billions of dollars. Think about what that means. This isn't just another small fintech partnership. This is a direct integration of blockchain technology into traditional banking systems. The fact that Ripple's Metaco is facilitating these services indicates that XRP is slowly but surely being woven into the global financial framework. At the macro level, there's another development that could impact the crypto market in a big way. On March 1st, the United States will begin imposing new tariffs on Canada and Mexico, increasing economic uncertainty. Historically, such tariffs have led to volatility in stock markets, which often spills over into cryptocurrencies. As a result, we may see further liquidations in the crypto market as investors react to these economic shifts. However, despite all these short-term price fluctuations, XRP remains one of the strongest long-term bets in the crypto industry. The approval of XRP ETFs is still a major possibility, and with the SEC actively closing lawsuits against other crypto companies, many believe Ripple's legal battle may be nearing its end. If the SEC finally settles or dismisses its lawsuit against Ripple, it would be a game-changer for XRP, opening the doors to institutional investment at an unprecedented scale. Moreover, XRP's deflationary mechanism gives it a unique advantage. Every time a transaction is made, a small amount of XRP is burned, meaning that as adoption increases, the circulating supply will decrease, creating upward price pressure. If XRP captures just 1% of global transactions, Analysts predict its value could rise significantly. Key takeaways. JPMorgan CEO Jamie Dimon is selling shares of his own bank, raising concerns about an incoming economic downturn. Michael Saylor and MicroStrategy met with the SEC to push for crypto regulations, indicating that institutional adoption is progressing. Massive Ethereum and Solana liquidations suggest that market manipulation is ongoing. Inflation in the U.S. is rising, which could impact financial markets and lead to further volatility in crypto. Germany's DekaBank, managing $377 billion in assets, is now offering crypto custody services through Ripple's Metaco, signaling increasing institutional interest in blockchain technology. The SEC continues closing lawsuits against crypto companies, making it more likely that Ripple's case will be settled or dismissed soon. March 1st marks the beginning of new U.S. tariffs on Canada and Mexico, which could create additional economic instability. XRP's deflationary mechanism ensures that as adoption grows, supply decreases, potentially driving prices higher. With all of these major developments unfolding at once, the next few weeks could be crucial for XRP and the broader crypto market. Will XRP ETFs receive regulatory approval? Will the SEC finally settle its lawsuit against Ripple? Is market manipulation preventing retail investors from capitalizing on the biggest opportunities in crypto? Let us know your thoughts in the comments below. Like this video, subscribe to the channel, and turn on notifications so you don't miss any of the latest XRP updates and crypto market insights.